Hello and welcome to this evening's Vox Markets investor webinar in conjunction with Turner Pope. CEO of Cadence Minerals, Kiran Morzaria, will be joining us tonight. He'll first be taking us through the company's current investor presentation and then taking some questions at the end. Now, if you have a question that you'd like to ask, please use the comment box on the right. I'll now hand you over to Kiran and see you at the end. Thank you.
Good afternoon. My name's Kiran Morzaria. I'm the CEO of Cadence Minerals. First of all, I'd like to thank Vox Markets for hosting this webinar, and of course all the attendees and all the substantial questions we've got. What I'm going to try and do here is going to go through this presentation as quick as possible. The full presentation is always available on our website and you can browse it at your leisure, and really focus on the questions because I know that there are several pressing questions that people want to seek answers to. So the next slide is of course just a standard disclaimer. Please read it at your leisure. This is the slides on our capital structure and shareholding. Again, read it at leisure, but I think it's the important point here is that, Cadence has actually over the last year performed, relatively well to the sector and to the AIM market index. I think that's partly driven with, really two things. There's the macro effect of stimulus within the iron ore, stimulus around the world, which has propelled iron ore industry, and iron ore price is quite high. And of course, the electrification of our vehicular transport. So we've seen an increased interest in lithium assets and rare earth minerals. Both iron ore and lithium assets are what we've got in our portfolio. And of course, our assets have performed very well technically and they've delivered. So whether it be Amapa, moving through getting its agreement in principle with secured creditors, or shipping the material there, and European Metals Holdings back in orders. We can go on those a bit later on, but ultimately, both there's a macro trend that is pushing our price forward, and there's success at an operational level by the management teams, which has also moved our price forward, I think. So, there's been a lot of focus on Amapa, but we are an investment company, and we have several other assets. And as you can see from these assets, they've got, they're billion-dollar assets, whether it be our JV holding in the MEXLIT 30%, which is part of the Bacanora Lithium asset, or our European Metals holding, where we have around 13%. And that's, one of the largest hard rock deposits in the world, both at $1 billion. And of course, we've got our Amapa iron ore and, Yangibana and McArthur Minerals, Yangibana being a rare earth deposit. And you can see that these assets have substantially de-risked. They're through the pre-feasibility stage. And that is often where you start to see an increase in value of these assets as they go through to, construction and commissioning. Next slide. Well, yeah, let's focus on what people have been focusing on the Amapa iron ore project. This slide about 2 months ago said de-risk, low capex, quick cash flow. It now says de-risk, profitable, low capex. And I say profitable because since the shipment of this, the first iron ore since 2015, that has meant that the Amapa project technically is profitable. And all things being equal, apart from maybe 1 year as we go through the development stage, this asset should remain profitable all the way through its mine life now, which is a great credit to this asset because of and the team that have been involved in getting it going again. And I'm really proud that we've got involved with it. And you can see what we're talking about. We're talking about that we are going to invest $6 million. $2.5 million is already in escrow, so there's no capital raise required for that, and that will get us 27% of what was valued by Anglo at a $600 million asset. So that's substantial upside for us. It's a good quality iron ore, 65% high, which gets a premium on the market, and also goes into this, has lower emissions in terms of refinement into steel, and of course lower heat required. You can see a location and infrastructure and a project summary there. Again, I'll let you go through it at your leisure. So I think the next stage is Amapa iron ore. Where are we at the moment? I didn't include this slide. We now got this. We shipped the first iron ore since 2015, around 45,000 tons. At one of the highest plat prices at $166 per dry metric ton. And we'll continue shipping this material until we've got about $10 million in gross profit. That's about 2 to 3 shipments. And after that, shipments will be under the settlement agreement with secure bank creditors, which we've said beforehand. We reached an agreement in principle, and we're really now going down to get the documentation finalized and done. So once that's done, we'll announce that to market, and then we'll continue shipping the material, which is great. So, for the next 2 years, we'll continue to ship material and generating revenue to be reinvested into the asset critically. Well, what's happening elsewhere? Well, other operations, we're doing tailings dams, an important part, given the sensitivities in Brazil about the collapse of tailing dams in other areas. The detailed review of our tailing dam. One important thing to note, that this tailing dam was not what they call an upstream design. The major tailing dam here are all downstream designs, and our initial review was that they were safe and in good condition, where we're carrying out more detailed reviews, getting access to data, historical data, so preparing relevant submissions, which is all part of our licensing, to the relevant authorities. We're also doing engineering conditioning study of the beneficiation plant. This is taking a bit longer than expected, mainly because of COVID. In reality, getting people, international consultants, to fly out there is very hard at the moment, and it's not considered a critical job, as it were. So it's just taking some time to do that. But all these two items are really the 2 items that are outstanding in relation to get our scoping study done, so that we can release that to the market and provide and show to the market what an NPV value of this asset is, given the current costs and revenue parameters. We're also doing some general maintenance elsewhere in the tailings dam and mine site. So as you can see there, this project is advancing. We're moving material, we're shipping material, generating revenue, and it's a hop, skip, and jump all the way through to getting to our ownership and development and long-term production eventually. I'd add that Cadence funded the working capital for the shipping of this initial stockpile, and along with an excellent team at Cadence, Indocino, and at Dev Mineração, who really executed this on budget and ahead of time. It's an impressive feat by everyone. So again, this is a nice diagram of the open pit, the railway, and the private port. I think it's important to show these all together, because many mines just have the mine and the resource, and then they have to commission a railway, or they have to negotiate with the contractor for the railway, and then they have to have they have to get space at a port. This system, once fully rehabilitated, has everything. It doesn't need to negotiate space, which we do have to do at CDSA at the moment. We'll have our own private port, which would be suitable for plus 5.3 million tons of iron ore, and a railway which will take it there, obviously at cost, and an integrated mine site and beneficiation plant. So that's a really important part of, we call it the Amapa iron ore system, not just the mine. Very simple, again, this is on our website, really talking about this asset in summary terms. 14-year mine life, ample resources, established processing routes, so de-risk on the technical, de-risk on the resource side, de-risk on infrastructure because it's there. We have an estimate of capex. Again, I hasten to add that was done in August 2019. So it needs to be updated for current input prices and output. So that will be revised with our scoping study, and it's a good OPEX. It's this is $21 free on board to the port, and then there'll be shipping on top of that. And it's a well-known and well-regarded product. I hasten to know. This first shipment, it wasn't like we were struggling to market this product. We had offers from steel mills, major trading houses, and we went with the lowest risk and one of the better pricing options there for the last sale. So what about the timeline? I think everyone wants to see these. Now, again, I anchor this on when we get our 2.5 million, when we get our 20%. So that's where our anchor point is. Of course, we are shipping material, and as I said beforehand, whether it be 18 to 24 months, depending on availability of CDSA, we will ship that material. That will be reinvested into the asset. A part of it will be reinvested into the asset. I would add that, I put 30-40 million. I know that's probably conservative by some, but I'd rather be conservative at this point in time because the inputs of the iron ore pricing can vary over 24 months. And of course, the shipping pricing can vary over 24 months. I mean, shipping pricing over the last month for specifically Handymax vehicles, vessels was one of the highest I've certainly seen in a very long time. So let's put that there and we can surprise on the upside, let's say. Get our satisfaction or our preconditions, which are the next stages, which is basically all the license to invest our next 3.5 million. And then in the background, we're doing commissioning studies with the idea to recommission over 24 months so that by the end of 24 months, we have the integrated port, the port recommissioned, the railway and the mine, and we're producing from the mine and shipping out of the Santana port. I think the majority of the capital, well, we know the majority of capital is going to go to the port and the beneficiation plant initially, and then there'll be a longer term investment strategy in the railway to improve various aspects of it. So I think I've really gone through what people have been focusing, but Cadence isn't just Amapa. Cadence is, of course, its other assets that it has. When we look at our market capitalization in terms of public assets, those investments we have in public company represent somewhere in the region of 40% of that market capitalization at this point in time. One of those being European Metals Holding. We talked about this enough. We know about the implementation of lithium and the importance of lithium in electric vehicles, and we've got a substantial stake in the largest hard rock lithium resource in Europe and the fourth largest non-brine resource in the world. It's a great asset with low cost producer, bottom cost curve, and it's got its location with SES, which is the power producer in Czech Republic, is really important because they've funded it all the way through to a construction decision. So it's a great asset, strategic located, and it will provide some, even if it's at higher production, put it this way, even when it's full of, let's assume that it gets to 25,000 tons per annum of battery grade lithium hydroxide. That will only produce a small fraction of what's required in reality around just in Europe. So it's a strategic and important resource for Europe for the electrification of vehicles, and we have our stake in it. We also have a stake in the Sonora Lithium project. We're a JV partner with Bacanora Lithium on the Fleur lease of the Sonora project. Now, that's not the La Ventana lease. That's not the area they'll get mined first. It will get mined later in the mine life. But nonetheless, again, this asset is large. It's highly economic, 1.25 billion NPV. It's again cost competitive, $4,000 per ton of lithium carbonate equivalent. So it's got all the approvals, and importantly, it's got its funding, right? It's raised its equity funding, which was an incredible feat by that team. And it's really great to see that they can really move forward through the development stage and, hopefully to production and commissioning thereafter. Yangibana project, this is a JV free carry on a rare earth minerals. Again, consistent theme here. These assets are substantially de-risked. They're going either finish their pre-feasibility, bankable feasibility study, or embarking on it, or going through production. Yangibana is a great deposit in terms of rare earths. It's particularly important for permanent magnets, neodymium and praseodymium, and it's going to provide, it's a very high basket of that type of material. So it's an important asset, low risk development within the rare earth assets. Lastly, we have 1% of MacArthur Minerals, which is an iron ore deposit in Australia. Again, substantial risk and a great resource with an excellent production of 3.4 million tons. That's the plan, and a feasibility study that's commenced. So those are our principal assets. There's the team, I think that that's in essence the end of the presentation, and we can now go on to the Q&A session.
Hello, welcome everyone watching, and welcome to this evening's Vox Markets webinar. Kiran, thank you for joining us, and thank you for that thorough presentation.
You're welcome, Fran.
Now, we've had a lot of questions come in for the community, so we'll try to touch on as many as we can. But let's start with the Amapa iron ore project in Brazil. Last week, investors were informed of the first sale of iron ore from the site since 2015. That's huge news. So now, in regard to the scoping study at Amapa, can you say when this will be completed and published?
Yeah, as I've just highlighted in the presentation, that's work that's going on in the background. Really, there are two main items outstanding on that. We've completed the resource, which we announced last year. We've done the mine scheduling internally, we know that. We have a fairly good understanding of all the other CapEx within scoping study levels. I think it's the conditioning study, or what they call the engineering conditioning study on the beneficiation plant. Now, given COVID and the restrictions of international travel to and from Brazil, you can understand that some international consultants are a bit wary going there at the moment. So that's taking a bit longer. But look, really clear that as soon as we've gone through the process of getting our agreement with a bank settled and executed, then we will be focusing on getting the scoping done as soon as possible, given the constraints of COVID in Brazil and in the UK.
That's great. Thanks for outlining that. Now, in regards to the tailing dam, as I understand it, due to certain external problems, the tailing dam has become somewhat of an issue for the local population. So just touching on this, do you think the existing dam is able to be adapted to conform to certain regulations, or do you see another dam as having to be constructed?
Yeah, so I think this question is, they're saying that there's some issues with the current tailing dam. There aren't. I think it's trying to refer back to the two tailings dam disasters that occurred in Minas Gerais, where they were using upstream tailings dams and they failed. Now, to be clear, and we've said beforehand, that was when we were looking at our due diligence, that was of a concern. We did a preliminary study on the tailings dam. First of all, we know that it is not this upstream type of tailings dam. It's developed downstream, which has much more stability and is suitable for this type of material. So we're now carrying out a further detailed study, and that's more to do with, as I've said in the presentation, getting the various submissions to A&M, which is the mining authority, making it compliant with current regulations. At this point in time, we envisage a wet process, and therefore, as we have a downstream tailings dam, that is safe and has been designed as safe and has been designed for the capacity of this mine and for its mine life with raises. So at this point in time, we're going to keep with the current tailings dam design because it is a recommended downstream safe design. And there's no intent at this point in time to go to dry screening or a dry dam. Of course, if that's efficient through the scoping or pre-feasibility study, then we'll look at developing that. At this point in time, it's as is, because that is a safe methodology and we've reviewed it so far, and it's stood up really well over the test of time.
That's great. Thanks for clarifying that. Now, along kind of similar lines, investors will also probably be familiar with the previous collapse at the port of Santana. Now, alongside infrastructure which was damaged, this also led to the Amazon being contaminated, as well as other waterways. So with this in mind, do you expect the new Amapa ownership to deal with this directly in terms of cleaning up the damage that was caused as a condition of being licensed to the site?
So, of course, we're going to comply with all environmental conditions, and with part and parcel of regaining these licenses, we're going to come to both agreements of how we rehabilitate areas that have been damaged. I think there's been no definitive proof that caused damage. I think the majority of that will be debris that needs to be dredged, and that was already in our plan. And so I think the simple answer is, to get it approved, there are very strict environmental regulations in Brazil, and we'll comply with those. And that's very important for our environmental and social governance aspect of this, of bringing this operation back into production. So simply, yes, we'll comply with it. And if that requires rehabilitation and of that area, then we will do that.
Right, and the collapse was due to a landslip. So would you say that, do you think it will be necessary to reinforce or buttress certain areas prior to any future loading that could be carried out at the site in order to prevent this from occurring again?
So when, part of that rehabilitation was completed, I think around 80% of the rehabilitation of the buttressing was completed. So I think there's one more buttress to complete. So we would look to complete that, and that was piled to a great depth and it concreted. So there was sort of good buttressing carried out already. So we'd complete that, and that's part of the design and stability design that we'll need to review. But at the point, what we budget for is for the completion of that work, and we would need to do that prior to bringing that port back into production, along with rehabilitating the mine and the railway. But these are all part and parcel of the deal that we got involved with, and we knew that that was going to occur. So I think there's nothing new here, and certainly we envisaged that all of these in our cost estimations at this point in time, and our understanding of potential liabilities, etc. So, but the advantage of this asset, to be clear, is yes, it's got some of these historical issues, but we don't have to build out a new mine. We don't have to build out a complete new railway. We don't have to build out a completely new port. That infrastructure is in place, probably, and this is sucking a thumb, and Anglo American along with MMX and Cliffs probably invested in the order of $1 billion into this asset, and we don't have to do anywhere near that amount. So the financial risk for us is heavily mitigated by that infrastructure, the presence of the licenses, certainly, for example, the railway, comparative to doing a new build.
Great. Now, in reference to, in terms of executing the settlement agreement, when do you expect the banks to sign this agreement?
Yeah, I've been at pains not to provide forecasts, and I'm going to stick to what our RNSs have said, which is effectively both. We've reached agreement in principle. We are both aligned to get this done as soon as possible, and we're in the process of going through drafting the various legal documents. And once it's executed, I'll announce it.
Great. Now, following last week's news, which we clearly touched on earlier, how many ships have currently been booked to ship the ore from Amapa?
Yeah, so I think there's a sort of a misunderstanding of what we're going to be doing here. So, first of all, what we're doing at the moment is when we're putting this out, we're offering it out, and we should ensure there's a competitive process in terms of each of the shipments at this point in time, and that we'll book the ships associated with that. So we don't book ships for 6 months in advance, partly because you probably have to book in the price, and at the moment Handymax pricing is pretty high. You will want to go through a competitive process through brokers to get the best deal possible on each shipment, and that's what we will do. And there is availability. Sometimes it might pay a bit higher because there's less availability, but other times you take the advantage when there's much more availability, and that's what we'll do.
And does the company expect local Amapa investors to buy Cadence shares?
I think that's a hard one to answer. I think you should ask the local population of Amapa. I think the most important thing for Amapa and the state and the municipality is the reinvigoration of these assets and getting them into production as soon as possible.
That's great. And I feel investors are quite keen to know that in terms of funding, how it'll be found for increasing the stake in Amapa from 20% to 27%. How is this going to occur?
Well, the great thing is we have options. We have a fairly large stake in EMH, which has done really well. We've also prepaid some of this, so there is some aspect which it won't be the full 3.5 million that we would have to raise. And of course, we have an equity as well. But at the end of the day, we'll try and do the best for our shareholders, and in essence, invest that next stake when we get all the licenses done, and with whichever is the best for our shareholders, in essence.
And it came out recently that Champion Iron is going to produce green iron ore, which means up to 69% of iron from their mine. So if the economics are favourable for Cadence, would you consider upgrading your existing ore to produce higher grade green ore, would you say?
Well, I think the thing about Amapa is it produces, and we're going to be producing 90% of it's going to be 65% pellet feed, which is high grade, lower, it requires lower heat and lower emissions. So it is greener in that sense. I think also importantly, we're, comparative to the previous situation, we'll be able to hopefully tap into the grid locally, which is 90% hydroelectric. So, there's going to be in terms of the carbon footprint, it'll be substantially reduced comparative to, let's say, running a remote site with diesel generators and coal-fired power stations. So I think we're contributing in a lowering the carbon footprint, whether it's going to be green iron ore or not, in terms of how it's labeled. I think 65% and reducing the carbon footprint through hydroelectric power is a good start.
That's great. And in terms of future contracts, are you considering contracts directly with steel mills, or will you be selling to a trading company? Can you say?
That's really depending on the price. What delivers the best value, best strategic advantage for the company, we'll go with.
Fabulous. And what are the chances of getting to 49% interest on the project?
Well, it's all about the economics and the outlook. I mean, at the end of the day, we've got a first right of refusal to get to that 49%. And if it's going well, we're hitting the targets, the intent would be to go to that 49%. Of course, that's all very much dependent on where we see the project going. At the moment, it's looking really positive, and I certainly hope to be able to exercise that first right of refusal and go to 49%.
And will Cadence change the status of the company to become an operator, or do you think you'll stay the same?
Look, at the moment, we don't have an intent to become an operator. The reasons, we've been an investment company, allows us flexibility in investment. And the only reason we become an operator as far as AIM is concerned will be for technical reasons that would prevent us from doing some investment, or for example, taking management control of our assets or being more involved in the management than we already are. So I don't want to... we just had a problem there with my camera, sorry. Shall I just switch to another camera quickly?
Yes, yeah, 100%.
Sorry about that.
No, not at all, that happens. Yeah, just switch to another camera and we can continue. Also, feel free to continue your answer if
yes, I'll continue to answer.
Whilst in the process.
so in essence, we'll look at what is best for shareholder value, and if it delivers a better operational outcome, then we'll look to do that. But at this point in time, we're very happy being a investment company.
Great. And would there eventually be dividends paid, do you think, from the project?
I think the intent, obviously, as I've said beforehand, the intent is that this project will be profitable and hence will be dividend generating. So that's the idea, is that we would look to get dividends from the project. Yes.
Welcome back. Well, as we segue into MacArthur now, can we just touch on your involvement with MacArthur? Given that your stake in the company is quite small, about 1%, can you explain why you've chosen to continue alongside MacArthur?
I think, it's 1%, and we believe there's substantial value there to still be crystallized, because it's a substantial iron ore project, a very high grade, going through bankable feasibility study. So we're supportive of that, and we see further value. So we'll retain the 1% so that hopefully the value can increase, and that can attribute value to Cadence shareholders.
That's great. And in regard to the Sonora Lithium project, can you explain the situation surrounding your joint venture? And more specifically, what is your view on the prospect of Ganfeng increasing production to 50,000 tons per annum of lithium from the project?
Well, obviously, we're first of all, explaining a bit about the project. Our JV is on an area called El Fleur, which is to be mined much later in the mining process, around I think around year 12 or thereabouts, so our benefit occurs at that point. As to the development profile, I think that's a question for Bacanora and Ganfeng together, because they are in charge of that project and development, and they've done an amazing job in raising the capital, Bacanora raising its equity capital to get that development ongoing. So that's really positive. All I can say is that when you look at the supply curve for lithium, and we've been saying this for a very long time, there aren't enough projects to really cope with the forecast demand. So in that environment, if there's capacity to increase and it's profitable to do so, you would hope that projects would do that. But in essence, that's that control that lies with Ganfeng and Bacanora to see what they want to do with this project.
Okay. And I think some investors will be interested to know that if Cadence financed the first Amapa shipment and plans to fund other financing as well, is it charging a commercial rate to the JV?
Yeah, so we've announced this. We looked to advance. It was £300,000, and it was a drawdown basis. So it wasn't all in one. We had 300,000. They drew down bits and pieces, and we charged it at 18%, or continue to charge it an 18% coupon, which I believe is commercial. And at the moment, we don't see any really major funding under that, any further major funding under that agreement. So that should be over as they start shipping, should be paid back to Cadence with the coupon. And our next funding, of course, will be the 2.5 million, which is already in escrow, and the commercial terms is that we get an equity stake, and the next 3.5 million will go up to 27%. That gives us 20% of this asset for $6 million when the asset was worth 600 million under Anglo American.
That's great. Now, just to round off, Kiran, as I understand it, you also have some investments in lithium assets in Australia. So could you just give us an update on what is happening here?
Yeah, absolutely. So it wasn't put in the presentation, and that's partly because it's quite a small investment. But we're continuing to see, some increased interest in lithium assets in Australia, in particular, hard rock, as we've talked about I just talked about a minute ago, where we're not seeing, supply meet up with the potential demand in terms of electric vehicles. So there's a continued interest in lithium assets, and I think we're talking with our JV partners, Synergy, looking at how to best monetize that for Cadence and its shareholders. At the moment, we are paying for the license fees, and I think that's what we should continue to do. But there are opportunities out there, and we look to crystallize them if at all possible.
That's great. Thank you, Kiran. That's a great note to end on. Thanks so much for joining us, and we look forward to seeing how Cadence progresses.
Thank you.
Thanks so much. And thanks to everyone listening and watching. Thanks for tuning in.